Ladies and gentlemen, good day and welcome to the RedTape Limited Q2FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that event is being recorded. I now hand the conference over to Arya Kotecha from Nuvama Wealth. Thank you and over to you, ma'am.
Thank you. Good morning, everyone. And on the behalf of Nuvama Wealth, I thank the management of RedTape Limited for the opportunity to host their Q2 FY26 earnings call. We have with us today Mr. Arvind Verma, the whole-time director, and Mr. Vivek Agnihotri, the Chief Financial Officer for RedTape Limited. I will now hand over the call to the management to walk us through the quarter, post which we will have the Q&A session. Thank you all, and over to you, sir.
Hi, good morning to all of you. Now let's start with the overview of the company. By 2025, we are about 2,000 crores company. That's myself, Vivek Agnihotri, as a CFO of RedTape Limited. Let me continue. By 2025, we are about 2,000 crore company. But more than the size and profitability and scale, I think what this company has is a set of most powerful brands that this country has seen. With RedTape after demerger in 2023, a very humble beginning with 468 crores in 2023, 1,831 crore in 2024, and 218 crore in 2025, has grown to become leading player in the fashion and retail industry. With multiple product innovations, new launches, especially in the accessories over a medium term. The economy, which is set to grow in per capita GDP as consumer came into that space when they start consuming discretionary category once per capita goes beyond 2,500 or 2,700. We believe as a country we are in cusp of next consumption boom reflected in size of consumption economy, which is set to reach almost 4 trillion and the third largest in the world over the next few years. One of the large shifts that we have done as a company is to look at how India and its consumers are going to be shaped over next 20 years. As you all know, it's one of the youngest demography that we have the benefit of. India is also one of the most digital savvy, which gives boost to the e-commerce and the quick commerce platforms. Let us go through where our passion comes as a full circle. We have total number of stores at 623 retail stores, out of which 303 online stores in 171 cities, 186 offline stores, exclusive showrooms in 134 cities, 6 factory shops in 3 cities, 9 shop-in-shop outlet in 8 cities, and SIS model of 119 stores in 58 cities, which makes a total of 623 retail stores. As moving towards the performance highlights for the Q2 2025-26, we have maintained a capital-light business model by collaborating with vendor partners, enabling rapid turnaround from design to market, efficient sourcing, and cost optimization across categories. The company strengthened its presence with 513 exclusive stores across 328 cities in 23 states and 3 union territories, further deepening its penetration in both metro and emerging markets. Total standalone income stands out at 501 crores and total expenditure goes to 458 crores and the PBT stands at 42.19 crores with paid up share capital 110 crores and reserves in surplus of 747 crores. The consolidated profit after tax rose to 27 crores, a 9.85% growth. The standalone PAT grew to 27 crores, which is an increase of 8.8%, reflecting improved cost efficiency, steady margin, and a strong retail interaction. Okay. This completes my presentation of Q2 financials.
Yes, sir. Should we open the floor for Q&A?
Yes, sir. Yes.
Yeah. Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from Sukrit D. Patil with Eyesight Fintrade Private Limited. Please go ahead.
Good morning to the team. I have a forward-looking question. As fashion and footwear industry shifts towards more premium products, omni-channel retail and global expansion, how are you planning to position the company to build a lasting edge, beyond just store additions or seasonal launches? Is there a deeper plan of action which is going to take into place? Looking beyond the quarter numbers, basically I want to understand what is the bigger plan for the company going ahead. Thanks. That's my first question. I'll ask my second question after this.
Okay, thank you. Hi, I'm Arvind. I'd like to take this question. We at RedTape have already implementing several things to enhance our ASPs and bring in some premium products which can further enhance the look and feel of the store also, and bring in some efficiencies in ASPs also. So we have recently launched a brand named Ozark, which is outdoor brand aimed at trekking and everything, mountaineering and everything. The ASP for this brand is on the tune of 2100 to 2500. Our open footwear range is, instead of basic EVA slides, we are adding more value to it. We are doing that. We are in fact doing from going away from basic EVA shoes to ETPU shoes, and we have also launched a premium leather collection very recently, which is also taking the ASP further up. All of this is already seeing an uptick of has seen an uptick of 18% from the earlier 12 to 13%. So we are very confident that our premium collection and our ASP will be going higher in the coming days, especially when with the season coming up, marriage season coming up.
Okay, thanks. My second question, again a forward-looking one. When costs are going to rise, whether it is through raw material, marketing or distribution, how do you make sure the margin stays steady without slowing growth? Is there a system you have built or you will be putting into place? It may be like smarter sourcing, pricing discipline, that will keep the profits stable, even when sometimes things get out of control, or there are sometimes things which are not, which you haven't planned for, but eventually happen. Just want to hear your view on this one. Thanks.
With respect to cost efficiency program, it is an ongoing process which we continue doing so. The primary thing is with respect to our contract manufacturing facilities, wherein they earlier used to source raw materials from outside. They are now doing a backward integration, and which is bringing the pricing down. So it's not, and I would like to add that this is not a one-time thing. It becomes only through the backward integration or something, because this is an ongoing process in every department of our organization, wherein every department looks into it. How does the cost efficiency increase with respect to not only better volume link pricing, wherein we have more negotiation power because our volumes have grown up very highly, more stable long-term relationships with our vendors, and with respect to backward integration. I think this is with respect to everything which is respect to the factory and sourcing, and with respect to financing and capital working, already the financing is already working on it. The continuous ongoing process. Thank you.
I think that's good guidance from your part. I wish the team best of luck for Q3.
Thank you so much.
The next question comes from the line of Shivam Singh, an individual investor. Please go ahead.
Am I audible?
Yes.
Sir, I have a few small questions. So what was the store sales growth?
Sorry, can I have your question again?
So what was the store sales growth in this quarter?
With respect to SSSG, our Q2 has seen a very, because this year since Diwali was earlier, so we, based on the glory of it, we are already seeing an uptick of 10% in the SSG category.
Okay, sir.
Especially in footwear.
Okay, sir. And sir, how is our lease liability lower this year than it was last year, even after opening new stores?
Sorry, come again. Can you repeat the question, please?
Sir, our lease liability for H126 is lower than H125, even after opening new stores. How is that possible?
Because we do have opened some stores, but we have also closed some non-performing stores. So maybe that impact has come in. So we'll come back to you on this.
Okay, sir. And sir, there was another question I wanted to ask. So our inventory has increased a lot. So how much of that is because of opening new stores, and how much of that is dead stock? Any clarity on that?
Yes. So if you see, the inventory days have definitely gone up. But this is a general trend in the retail industry, retail and online, because we are primarily focusing on our retail stores and the online business. Generally, there's an uptick of inventory. There are a couple of reasons for that. First, if you see this year, because the season is early, the Diwali was early and the marriage season is early, and it's a long period we are getting. So we wanted to keep our inventory levels high, just to ensure that our numbers, we don't lose any numbers and we don't lose any customers in the long season. Second, with respect to the online division, we have opened some multiple warehouses because we want to be closer to the customer, because in this world of quick commerce and everything, you have to be closer to the customer. So we have opened some new online warehouses in Ludhiana, Hyderabad, Howrah, and this is also taking up some base stock of inventory and everything. And last year, because we faced this problem last year we did not have enough stocks going into the season because of two factors. One was BIS, because that troubled a lot, and second, because there was a turmoil in Bangladesh. So last year in the same period, if you see, our inventory level was very low. The reason for that is we did not have enough stock, and hence the last year's sales also was not very great of what we had thought it would be. So this year we are already seeing a very good uptick in the season. We are seeing some very good numbers coming in, and this is because of the inventory. So inventory levels will definitely go down in the next quarter and the subsequent quarter.
Okay, sir. And sir, our net capital working days, will it be stable or will it be going down again? Because there's a 62 days increase in it.
It will definitely go down, because as in when more sale growth we can see in the next quarter and subsequent quarters, then working capital days will also go down, right?
Okay, sir. And so there's one more question I want to ask. So how much of our sales is at MRP and how much of it is discounted? I want to know it as a branding sense, like, is our brand value growing or is the sales only discounted?
So we are a brand which offers discounts all year long. We don't sell anything on MRP. So the strategy is the customer gets on 70% off on everything. So we internally term 70% off as our MRP. The strategy is such that the MRP is jacked up, and the 70% off is a constant factor for our customer. So for us, internally, 70% off is our MRP.
Okay, sir. And sir, do we have any incremental pricing every year?
Yes. We are already seeing an incremental pricing every year. Like I previously explained, our ASPs are going up, and we are already seeing an uptick in 8 to 10% in footwear.
Okay, sir. And sir, our store expenses, operating expenses, how much of that is different than an online platform channel? The commissions we are giving them, is there a percentage difference or is it similar?
I think the expenses are normally the same in online or offline. The only benefit we get in online is we get some rebates and everything, then the cost structure changes. And currently also the e-commerce channels have changed their billing structure and the pricing structure. So the rebates make a difference, but normally the expense level, if you see, it's the retail and online operate on the same margin, almost on the same margin.
Okay, sir. And sir, regarding the data we are storing on the offline stores, do we have any data around how much of that is repeat sales and how much is new customers? Percentage of sales?
We do not measure as such. There's no method to measure as such, but our general understanding is that a footwear consumer comes back to us after every 60 days or so, and our apparel customer comes back to us every 30 days. Okay. Because if you ever visited our RedTape store, we introduce almost 50 new styles of footwear every month. So hence our repeat customer business is a little higher than other peer brands.
Okay, sir. Thank you, sir.
Thank you.
The next question comes from the line of Sanjay Munjal, an individual investor. Please go ahead.
Yeah, hello. Am I audible?
Oh, yes.
Hello? Okay. So my first question is regarding the EBITDA margins. So in this quarter specifically, Q2 FY26, we saw a margin dip from 47 or 46 to 39% of gross margins. And in the EBITDA margins, we saw a dip from, as compared to Q1, 18 to 16.49%. So is there any specific reason for this gross margin and EBITDA margin dip?
See, basically, it's effect of e-commerce, whereby there is a reduction in the gross profit, but corresponding expenses in the e-commerce like commission, etc., has also been reduced, giving no impact on net profit. Normally, what happens if GP goes down, it means increase in the COGS. But if the same decrease in GP is compensated by reduction in operating expenses, the NP has no effect, right? But the GP decreases is offset by the decrease in operating expenses. The company has managed operating expenses to maintain the EBITDA margin, actually.
Okay. And we recently saw a GST cut. And for the 1,000 to 2,500 price range products, the GST has been reduced from 18 to 5%. So do we see any benefit from this because our major product line falls in this range?
Yes, so GST has come as a benefit for us, definitely, and I would not say some. I think 99% of our products come under the 2,500 category, and because of this, the ASPs have already gone a little down. So I'll tell you one strategy which we adopted is before the GST drop, we were offering 70% off. And post the GST drop, we do it at 74 to 76%, and in some cases, we even went up to 80%. So that dip also, did an uptick in repeat customers and customers willing to buy more. And we also had a scheme of buy one and get one free and all of that. So that benefited in the post-GST era. I think GST benefit in the longer run is going to be very beneficial for the whole country and not only us as a brand.
Yes, that I agree.
Mr. Sanjay, could you please come up with a question again?
Yeah, sorry.
No, sir.
Hello?
Could you please speak through your handset?
Hello? Am I audible now?
Yes, sir. Please go ahead.
Okay. So my second question is on the export strategies. Like we recently entered FTA agreement with the UK market. Okay. And I think the RedTape brand is expert in UK market. So do we plan to re-enter the UK market again, or we concentrate on Indian market only?
So we have recently re-entered UK market through Amazon. Also, it's a very start. And with respect to the FTA agreements, please understand that it has not yet come under effect. It is not. We believe that it will come into effect on 1st April 2026, and not now.
Yes.
But that will definitely give some, headwind getting into UK market to gain some traction. We are already there in the UK market. We are there in Amazon, but we also need to understand that the Western countries are not doing very good in terms of their own economy, and the cost of living in these countries have become very, very unsustainable. So there are going to be a lot of tailwinds in this country. So we will not be very focused on these markets. We want to explore India first, because India and neighboring countries we see a lot of traction. we want to explore South and West India and all of that. But having said that, export is definitely on our agenda, and we will, in the coming years, I think 2 to 5 years, we'll see 10% of the business coming from export.
Okay, fine. That's clear. One last question, and that will be over from my side. My last question is regarding our long-term growth strategy. So we are doing good organically in the Indian market. We are increasing our retail footprints. So do we plan to grow inorganically too? Like, do we plan to acquire any other brands or any strategic partnership, distributor partnership with any brands on any side on inorganic growth?
So I'll answer this question in 2 parts. First, I don't think organic that we are there's no scope for organic growth in our brand, because we only have 500 stores, and in a country with a population of 140 crores, 500 stores is nothing. So primarily our stores are currently based out of North India. We are now increasing our store count in South, West and East India. In fact, we are seeing some good traction coming in from Hyderabad and Kerala markets, and Bihar, in fact, which was quite surprising for us. Secondly, we are not in the business of acquiring brands or taking over brands or having any outside brand in our kitty. Our strength is that we can make our own brand, and we are already working on that strategy. We have recently launched Ozark, which is a mountaineering trekking brand, and the response is very good. We have also relaunching our brand name Bond Street and Mode. This will be primarily footwear, and this will also bring in some, we are targeting these brands to be in the 500 to 1,000 retail scenario brands. I think these will bring in some volumes also and add to our turnover. And third, we are also increasing our subcategories within our brand with respect to sunglasses and luggage, hard luggage, and undergarments and belts, wallets, sunglasses, etc. So that will also give some headwind.
Okay.
Thank you.
One thing on this sunglasses and the hard luggage. We recently launched our hard luggage and the sunglasses. Is it getting good customer traction? Like, is it getting good response from the customers?
Good would be an understatement.
Okay. Thank you very much. That's all from my side, and all the very best to the management for the growth.
Thank you so much, sir.
Thank you.
The next question comes from Ishank Bansal with Stock Bull. Please go ahead.
Am I audible?
Yes, sir.
So my question is, first of all, I would like to make you congratulate that your confidence is very good about the company, and I'm a very old investor since Mirza, since 2010 or 11. So I would like to have some questions. Like, in 2025 financial year, what was the store count of yours?
So you're speaking about financial year 2025, right?
Yes.
24. So our count was 424 stores.
424 stores. Okay. Now the store count is something 513 you are talking about.
Yes.
After being the growth of almost 100 stores, 90 stores, why is the revenue is just growth by 15%, and still your margins are not improving, and the bottom line is same, 25, 27, 38 crores?
So to answer this question in your perspective is, please understand that all the stores do not open in just one date or period. They have opened at different phases of the year. Secondly, last year we had a problem with respect to stocks, especially in footwear, wherein because of BIS and the Bangladesh turmoil took a heavy toll. So if you see last year Q2, our stock levels actually went down. The stock cover days actually went down. That was not a scenario we wanted. Although it may look good to you, but for us it was a very poor situation wherein we did not have stocks to fill in the stores, right? Typically, retail in India operates at a 5.5 to 7 month stock circle. So we needed to have that. So last year, with respect to stocks, it was challenging. This year already we are seeing a good headwind and coming and Second part of this question is also because last year, one more thing which happened was because we are primarily based in North, the winter season did not start off well because there was no winters as such in northern part of the world, for India, sorry. And this year everything, is getting placed at a very right period. The Diwali was early, the marriage season already started. We are seeing an uptick of customer coming in and buying, and we have good stock. And one more perspective is 90% of our footwear stock inventory which you see is less than 1 year old. So that also gives an answer to your question is ki last year the stock level was very low according to us, not high.
Okay.
And this quarter 3 and quarter 4, the results will speak for itself.
Okay, that's very good statement from your side. Then we expected that the last year Diwali quarter, 661 crore growth you have seen and 73 crore PAT there was. So we can, how much in the percentage term we can expect the growth?
So we will not like to put some numbers because we are very finicky about numbers and sharing of numbers. But you will be surprised and you will be happy. We are targeting some very good numbers in quarter 3 and quarter 4. We end on a very good figure this year. We are very sure about it.
Okay, that's very good. Just last question I want to ask. This time you have presented the investor presentation. I would like to know some more written facts like this. The result should be presented in the manner of brand-wise revenue plus verticals of men, women and kids. And volume growth, there should be a volume growth seen in the investor presentation. How do we know that in which sector we are voluming?
Surely. So we'll improve that. We'll definitely improve that going forward.
And the last thing is the RedTape Sports stores you have been opening. So how much count is the RedTape Sports now counting in these 513 stores?
So currently the sports specific stores are 7. To give an early perspective on your earlier question, I would like to just inform you this: 70% of our business comes from retail stores, 30% of the business comes from online.
Okay.
And 55% is footwear. Sorry, 61% is footwear, and 35% is apparel. But we'll give you a more depth in knowledge from next time onwards.
Okay.
With respect to sports stores, we are focusing only on North sports stores because in North our presence is already very high, and there are some markets wherein you get smaller size stores and everything, and that sports format works out perfectly well. But when we are entering the West and East India markets, we are focusing on a model wherein we can showcase a better range and with a bigger width. That's how our strategy is.
So we will expand RedTape Sports stores in North area. We are expecting.
North area. Yes.
Okay. And what is the criteria of kids segment, women segment, and men segment? Which were cater the most?
Women's, we have already seen an uptick last year. Women's business in online was close to 12%, but this year it is almost 17-18% right now. Women's share, especially for footwear, is growing. We are already working very strongly on the women's apparel category also. Kids business in the retail stores is very good. Kids in online is not very good. We try and not sell kids footwear in online because of the return issues and the sizing issues. But kids business in our retail stores is growing.
So, in the terms of unit economics, we can expect in percentage how much men, women, and kids?
So, men, women, and kids would be, with respect to retail, in footwear. Supposedly, if you say footwear, 79% of footwear sales in our retail stores is of men's. 17% is contributed through women and 4% through kids.
Okay.
This number will change. Our women and kids is improving.
Okay. So in next 2-3 years, how much growth we can expect in the terms of revenue and the bottom line?
For every year, it will be very impressive to say the least, because we are targeting 20% year on year. So let's hope for the best.
Thank you. That's all from me.
Thank you.
The next question comes from Devanshu Bansal with MK Global. Please go ahead.
Hi, thanks for the opportunity. Sir, generally, if we see from footwear perspective, the entire space is sharing a very pessimistic kind of an outlook. I'm referring to all listed companies. Now, the SC reduction has happened. Now trends are expected to improve. But overall, if we see over the last couple of years, the trends have been very muted. But encouragingly, your company's performance has been relatively better. Firstly, I wanted to understand your products are always available at 70-80% discount, like you said. Firstly, what is the strategy here? Is there any global model which we are trying to replicate in India? So that's the first question. I'll come back for the follow-ups.
So we are not following any global model. We are creating our own. Indian consumer loves discounts, and we are giving them that. So previously, as I answered, 70% off for us is the MRP. For consumers, they are getting good deal.
Sir, don't you think this in a way also impacts your brand positioning, because consumers may always be in a doubt whether they're purchasing at the right price or not. So anything on those, do you feel that this can impact the brand positioning?
Sir, not really. We do not think that, because we are already following this strategy for the last 5 odd years. In fact, our numbers every year and the store counts and everything is there for everybody to see. I think in India, as I said earlier, Indian consumer loves discounts, and they're getting, it's not only about discount, it's about the product we are selling. Our product is comparable to the best in the world. So if they're getting a good price at a 70% off, a good price with respect to good product and good styling, good design, I think that is what is working for us, and that is where we are focusing also.
Understood. Sir, likewise in the sneakers category, again, you've done a very good job. But there are other players also now who are talking about 100% plus sort of growth in this category. And they have been investing in facilities for uppers also, which they sort of are indicating that it is the best possible in the world. So do you think this can sort of impact our growth, or maybe what's your plan to compete with such an offering once it comes into the market? And a light question to this is, now earlier we were a major player in the value sneakers category, and we were following this model. Now that if the other players sort of come up with lower MRPs as such, do you think that customers can sort of move towards the other brands? So, yeah.
So, okay, I'll answer the second part first. Value we offer is at the price which we are selling the product is incomparable to anybody. Secondly, all the new players which are coming in, please understand that they do not have, we are primarily a footwear company. We know how footwear works. We know how footwear is manufactured. We know how back-end integration works. The raw materials that we use for our outsole, everybody else uses EVA, we use ETPU. Our dial lace-up shoe, for example, we were the first to introduce our dial lace-up footwear in India. We have premium PU-molded footbed. Please understand, the technicalities for producing footwear is not easy. And we have an experience of almost 30 to 40 years of producing footwear. And now, through our contract manufacturing arrangements across the world, we know how to bring in the best quality at the best price. So, we do not fear any new entrants. In fact, they need to look up to us and, follow us.
Okay, fair enough. Sir, but these players are also sort of having a very good historical lineage, right? So they are not new entrants. They were also in the footwear space. But I get your point. Can you just help me understand what are your key product differentiating factors? You did mention that I couldn't catch up, as in based on your soles, uppers. So what are the key differentiating factors for your products?
So, it is with respect to, first of all, it is with respect to the designing. If you see our designing order, we introduce almost 50 new styles every month in our retail stores, which is a number I think nobody in India can match as of today. Post that, the various other factors are, we try and not use EVA soles very much. We in fact do our ETPU, which is a much better composition of the sole. It gives you more comfort, is very comfortable. Like we said, we use premium PU molded footbed. We do not use a normal footbed. I think the wide range, the wide variety which we do with respect to sneakers, athleisure, running and walking shoes, I think that is our strength, and that is what the customer, is coming for at our stores. And hence the repeat customer, like I said earlier, for footwear we have seen almost every 60 days our customer is coming back to our stores to buy new. I think that is also helped. With respect to apparel also, in the current new range of autumn-winter, there's a heat tech which we have introduced. I think we will be the second brand in India to launch heat tech. And it's a very good product at a very good price. So everything which we do today, because of the sheer volumes which we have, our negotiation power from the factory to get the good price from the factory is very high. To give you some head-on numbers, currently if there's a one style, one color which I have to produce of a footwear, we do not order it less than 15,000 pairs, one single color. I think that strength in itself gives us a good power to negotiate on and get the best price.
So just a small follow-up. When you say that you are sort of following a shorter, the design cycles, you are sort of on a weekly basis sort of servicing 50 new styles. So this minimum order quantity still remains so high, as in is your sell-through so high?
Yes. It still remains so high because we, please understand, we are not in the repeat business. Nothing is repeated at our stores. So if there's a style which comes in, it has to go out. It cannot stay there forever. We are not in the repeat business model. And secondly, with 500 stores, 500 plus stores now, and the online and 7 online warehouses because if you go to Flipkart or Myntra and Tata or Ajio or anything, we are currently in the top 3 brands of footwear selling in there. So you can gauge that the volumes and the numbers which we have and the strength we have. So this numbers which I told you of 10,000, 15,000, 20,000 per color is not big.
Understood, sir. Understood. Thanks for taking my questions. All the best to the team. Thank you, sir.
Thank you so much.
The next question comes from Vineet Jain with Siddh Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. I have one basic clarification because I am following the company for very recently. So what do you mean by online stores and offline stores?
So with respect to online stores and offline stores, this is a unique concept which we brought in around 5-6 years back, wherein because there was an onslaught of online, if you can recall, almost 5-6 years back, every consumer which went into the retail store would compare the price with an online portal, whether it be it Amazon, Flipkart or Myntra. They would compare what is the price here, what is the price there. So we thought of a unique idea wherein we said we will name our stores as RedTape Online Store, wherein you can match the prices with online. So you don't have to worry that the same product which you are seeing in the store is priced at a different price point in the online arena. So that confidence which we gave to our consumers, it still remains intact. If the product is same across the online and the retail stores, the pricing would be same.
And
of online. Offline are basically smaller stores which is less than 1,000 square feet. The online stores are to the tune of 2,500 square feet to almost 8,000 square feet. And it carries the complete range.
Okay. That's very much a good clarification. So can you now please elaborate on the strategy on your store openings? I see that 80% of your stores are in the Tier 2 and Tier 3 cities. And also, can you throw some clarity? What kind of stores are you looking to open in the near future, and what will be the kind of count you see in 2-3 years?
So if you see for the past 4-5 years, every year we are opening 80 to 100 stores. That is, I think that we will follow that for a couple of years more, because we see a lot of opportunity in the South and West and East India, and our strategy would largely remain the same of opening 80-100 stores per year and increasing our store count. The sizes of the store may vary according to the region, whether we are entering a Tier 2 market or a Tier 3 market or a metro market. That strategy would remain, close. We will be grounded to the situation where we are.
Okay, sir.
Primary strategy, 80 to 100 stores per year.
Okay. So on the one question on the manufacturing, how much is in-house, and do we still source anything from Mirza Tannery?
5% of the footwear is from our own factory. From Mirza, yes, we take, but the volume is not very big because they are primarily leather shoe manufacturers. Leather shoe share in our stores as of now is very low. We are trying to increase because of the current winter and marriage season. It will slightly grow, but the buying from Mirza Tannery is very low.
Okay. So coming to the brand strategy, you already spoken you've given your views. Why do you want to continue as a discounted brand? But for the past couple of decades, if you see RedTape it's always positioned itself as a premium brand, and now you want to position yourself as a discounted brand. But this will also restrict you from getting into large store formats in the heart of metros, and so what is the planning behind this, or do you in the near future plan to come up with something which is more brand conscious or and doesn't position yourself as a discounted brand? Discounted brand, it always is looked after as a cheaper brand. So your views again, please, on this.
Yeah. So I agree to your point wherein we were always marked as a premium brand when we were primarily into the trading and distribution business. But please also understand that during that period, there was no big growth coming into our brand. Only when we moved away from the large format stores and the distribution model, we saw that there are consumers who wanted our products and they trusted our brand. And this also helped us bringing in our apparel range and other categories, everything. Currently, if you see our business model, we are primarily focusing on our own exclusive retail showrooms and our online business, which is also done through our own marketplace warehouses. We have 7 warehouses in India. We do not currently do any trading business. We do not currently do any distribution business. We are not there in the large format stores. We have come out of it almost 5 years back, and we do not intend to go back there because they restrict our sales. They restrict our numbers because that's only so much you can do in their stores. So within our own stores, and that's been our strength, because whatever new category we have got into, our consumers have lapped it up. Whether it is apparel, whether it is women's footwear, whether it is kids footwear, whether it is sunglasses, hard luggage, UGs, everything which we have done, consumers have lapped it up. So we want to stay that way. With respect to the other part of the question, which is related to our premium brand and a discounted brand, please understand that's a myth. And that's purely a myth today. Earlier, if you had asked this question 10 years back, I would have said, yes, it definitely will make an impact. But for today's times, it has become a myth. With the Gen Z coming in and the new consumers coming in, discounted, non-discounted, they are looking for a good price, and looking for a good product at a good price. Every brand per se, I do not wish to name any brand, but every brand per se is selling on discount online, and the discounts are very deep. So you can get a certain big brand jeans which is a jeans brand, you can get their product at below 1,000 rupees on online. And in this, if you go to the store, nothing is priced below 4,000 rupees. So that is not the place we want to be. We do not, that's creating a lot of confusion. We want our customers to compare our products and get it at the best possible price. I don't think a discounted brand or a premium brand, everybody has their space in the market now, and it does not matter whether you're giving a discount or you are charging a full price or you are charging a premium on it. It is what works for you best, what works for the company's DNA best. It is how the market is going to accept you. The primary thing is the product at a good price, and that is working good for us.
Okay. So again, just on the store opening, you are saying that will you continue to focus on Tier 2 and Tier 3 cities, and like 80% you're right now there, so you will keep that ratio, or the ratio is going to change?
The ratio should more or less remain the same, but when we are getting into bigger markets, for example, if now we are focusing on Maharashtra as well, so there will be a lot of stores in Mumbai which you'll see coming up in the next 1.5 years. So yes, we will be definitely interested in going to Tier 2, Tier 3 cities also of these states, whether it is Karnataka or whether it is West Bengal or Bihar or Maharashtra. So I think the mix should remain the same.
Okay. Thank you very much, sir.
Thank you.
Thank you. The next question is a follow-up question. It's from the line of Shivam Singh, an individual investor. Please go ahead.
Am I audible?
Yes.
Sir, there was an income tax raid from September 11th to 16th. Was there any observation, penalty, or any follow-up steps that we need to know about?
No, sir. So we are glad to share that there has been no penalty, no adverse remark on our company, and it's an ongoing process. We are cooperating fully with them, and there's no adverse remark and there's no penalty.
Was it on a store or was it in our warehouse, or what was it on?
Well, it was in our offices, registered office. It was in all our warehouses, almost all the warehouses, and a couple of stores.
Okay, sir. And sir, given Zudio and Insta have scaled in apparel and they are moving into footwear, sir, don't you think
sorry to interrupt, Mr. Shivam, we are unable to hear you. Could you speak through your handset, please?
Yeah. Am I audible now?
Yeah.
Yeah. So given Zudio and Insta are scaling up now and their apparel business is growing really well, they are getting into footwear. Is there a competition risk we are ignoring maybe?
See, this is a phenomenon which comes after every couple of years. I have been in this organization for almost 26 years now. I've crossed 26 years in this organization. Every couple of years, every 3-4 years, we see somebody making a mark. Like when Zara came, everybody said that Zara ne sabko hila diya, and Zara will do this and that and do the retail industry. But everybody finds a way to survive, and every brand has their own DNA, their own strength. Zudio is doing well, and we wish them well. But we are focused on our brand, and we have not seen as such any issue with respect to if there's a Zudio in the market and there's a RedTape store in the market. We are not seeing any drastic drop downs in our volumes or sales. So it is good. The market is open for it. We are a large country. We are a huge country, and there's a lot of space still for many more brands to come in.
Okay, sir. And sir, given we have expanded in a cluttered manner because of our centralized manufacturing and our transportation, will we be doing it going ahead as well, or will we be scattering our expansion now?
We will be scattering our expansion. With respect to warehouses also, if you see, we have warehouses all over India. We have a warehouse in Hyderabad, we have a warehouse in Howrah, we have a warehouse in Bhiwandi, and more recently we have opened in Ludhiana as well. So that way we have been always, and in the past, if you go to the RedTape history in the past also, so when we were doing all the large format business and the distribution business, we were primarily present in almost all across the country. So that's not a big challenge for us. And logistics in this country is improving day by day. So that's not a challenge.
Okay. And so how many outlets or stores of ours is profitable, and how long does it take to break even?
Generally, 12 to 34 months is when a store becomes profitable. The first part of your question was, is every store profitable? That cannot be. There are some challenges. There are market shifts there are some challenges wherein the market shifts in a tier 2 city, for example, the market shifts outside, and suddenly there are cluster of stores which have gone outside the market, and that becomes a new market. So all of that is retail shifts. So customers shift. So you have to be there, and you have to shift our stores and everything. I do not have a number as of now which stores are how many stores are profitable and not, but that's a constant factor in a retail business. Some stores close and some stores shift and some stores reopen and all of that.
Okay, sir. Thank you, sir.
Thank you.
The next question comes from the line of Pankaj Agrawal, an individual investor. Please go ahead.
Hi, good morning. My first question is on how effective is expansion strategy into tier 2 and tier 3 cities and success rate in e-commerce. What is our revenue contribution and margin contribution in both online and offline stores, growth in both channels?
So our 70% of our business comes from our retail stores. 30% is coming from our marketplace stores. The contribution from online is growing year on year. Is also growing year on year, and because the ranges sometimes because of the business volume, sometimes you have to produce a little lower side pricing for e-commerce portals, and that we do. So the ranges are sometimes different from what you find in the store and what you find on the online business. But currently the business is tagged at 30%, 70% comes from retail. This mix may slightly shift. It may go to, I think, 65-35 in the coming year. Next year, I think that's how the mix should change.
Okay. And margin contribution in both the channels?
Margin contribution almost, in fact, for online it is a little lower on the lower side, but that's the nature of the business. I think, but it does not. Our business is built in a way that we average it out, and it's always a good margin.
Okay, because that feedback is slightly different from how different e-commerce companies, including in food, etc., where e-commerce margin is much more compared to the store margin.
No, sir, not in our case. To be honest, not in our case.
Okay. My second question is on company's long-term capital allocation plans, if any, and dividend policy and sustainability of dividend policy.
Can you repeat the question, please?
What are the company's long-term capital allocation plans, if there is any, and what is the company's dividend policy as a percentage of profit, etc., or sustainability of the dividend policy in long term? Am I audible?
Yeah. As far as capital allocation is concerned, let me tell you that the capital now, as far as debt position is concerned, we are now at a very comfortable position. So we have a good sustainable debt position in the near terms. So capital allocation along with the equity will remain at the sustainable levels. So that will not be an issue in the coming second, third, or fourth quarters. As far as
I think that is comforting.
Yeah, it is already uploaded on the website, dividend policy, and giving dividend is a board decision actually. Right? So we have already given an interim dividends also very recently.
Yeah. That are my question. How sustainable do you think it is? Because it was more or less first time thing.
Can you repeat the question?
My question is on this sustainability of the dividend policy. Are we going to sustain this dividend disbursement every year, or is it one-off, or how do we approach to this?
It's purely a management decision. If we see any further, it's being a UPSI information. It can't be shared, but it's purely a management decision. If something we will decide, the shareholders will get to know well within time. Okay.
And my last question
So your boss,
coming quarter we have.
Pankaj sir,
Questions on.
I can speak.
Okay. Hello. Better now?
Yes, sir. Please go on.
Yeah. My next question is on industry specific. This quarter we have seen different industries performing in a different level. For example, larger industries giving muted performance, smaller companies giving better growth. So is our growth is it in line with industry, or is it to be read as seasonality or channel sales?
Although we have not compared, but we would like to be better than the industry. We would like to perform better than the industry.
Sure. Thanks a lot.
Thank you. The next question comes from the line of Sanjay Munjal, an individual investor. Please go ahead.
Yeah, I have a follow-up question. Am I audible?
Yes.
Hello? Am I audible?
Yes, sir, you're audible. Please go ahead.
Okay. I have one question on our retail footprints. We have 510 stores approximately. So how many stores are under the COCO and FOFO model, or all the stores are company-owned and company-operated?
So out of the 500 odd stores which we have, almost 160 are managed by the company, and 350 stores, approx 350 stores are managed by the franchisees. But you also need to understand that in our franchisee stores, the billing to the consumer is from the company's name. So ideally, the GST registration is of the company. The stocks which are there at the franchisee stores is also of the company, and the billing is to the consumer is from the company.
Okay, and how much is the profit share with the franchisee on the franchisee-operated stores?
Our franchisees get a fixed margin of 25%.
Okay. And one last question. We have 30% revenue from the e-commerce. Can you please quantify the number? How much are we getting from our own website as compared to other marketplaces? Like how much revenue are we getting from our own RedTape website?
So from the online business, if I compare only the online business, our website sales are currently at 5%, which is we are not very happy with that. So our target is to take it to 20%, and we already have a team in place now, and we are going to focus with respect to digital marketing and other activities, influencer marketing and everything, to bring in more traffic to our website. The target which we have given to our team is we would like to grow it to 20% by the end of next year.
20% of the 30% e-commerce revenue?
No. Only completely of the online business. So if online is 100, if our online business is 100, currently we are doing only 5 from our website. We want to go to
Okay. I got it. Thank you. That's it from my side. Thank you.
Thank you. The next question comes from the line of Jay Lara with JL Capital. Please go ahead.
Yeah. Hello. Good afternoon, sir. Hello, I'm audible?
Yes.
Yeah. Good afternoon, sir. सर RedTape जो ब्रांड है वो जेनजीज के बीच में बड़ा कॉमन है. So is it like we are making this footprint only, और आगे जाके हमारा क्या मतलब एक्सपेंशन के लिए प्लानिंग है, और what we are going to do so that our profitability backs to the number of 20% or more than 25%?
So I think you answered your question yourself. If we are being seen as very common brand among the Gen Z, I think we have done something right. To be a younger brand is always of an advantage. We do not want to be seen as an older brand, for example, and for the older people. So if the brand is remaining young and in the eyesight of the Gen Z, and the Gen Z is accepting our brand, I think this is a win-win for us, because ultimately they are the ones who are going to shop more and buy more and everything. We want to, at all points, we want to remain young and appealing to them.
Yeah, I also sent a reel of advertisement for RedTape also. Please, you can see it and reply it.
Sorry, I didn't get this.
I send you a mail of RedTape means shoes reel. I send it in your mail. Can you see it and respond to it?
Sure, we'll do that.
Okay, thanks for opportunity.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Yeah, thank you. I'm Arvind, and it was a really pleasure speaking to you all. We at RedTape are very optimistic and very, very confident that the upcoming quarters of Q3 and Q4 will be very good to us. And we would like to, reconnect with you all in the coming future with hopefully better numbers and better figures. Thank you to everybody who attended this call, and wish you a good day.
Thank you. On behalf of Nuvama Wealth, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.